All right. Allbirds is up 800%. That is the headline that I saw the morning of April 15th. That was quite interesting, very capturing of our attention, and we wanted to talk about it. So, April 15th, Allbird announced that it had signed a $50 million convertible financing deal with an unnamed company, and they were pivoting away from their traditional shoe business into basically an AI company, a GPU as a service company. Super interesting. They've been struggling for quite a bit of time since their IPO. I believe they're down 99% since their IPO had them at about $4 billion valuation. They were either going through bankruptcy or getting near bankruptcy, so they had ended up selling the Allbirds brand and footwear assets to a company called American Exchange Group, which has a few other shoe brands. And with that sale and with this capital raise, they announced a full pivot essentially to a totally different business model. Instead of selling sneakers, they are going into a very, very competitive and very, very different space of buying CPUs and selling compute to other companies. What are your thoughts, Gordon?
Well, the first question, of course, is like, is this just bandwagoning on the AI boom? Those of us who are old enough to remember the dot-com bubble, companies, anything with .com added to its name, the stock went up for a little while back in 1998. But I remember one positive kind of comparison is MicroStrategy. Now, MicroStrategy went through some difficulties with some incorrect earnings statements, and they got some fines and stuff like that. But they were a company that did business intelligence, a tech company, and they competed with like IBM and, companies like that, IT services. And sometime, I forget what year it was, in the 2000 teens, they switched to becoming a Bitcoin repository, where they just took all of their cash they had built up and they bought Bitcoin. They had big purchases around like the 27,000 mark. And then at one point they had a margin call and they had to sell like 11,000 out of their 140,000 Bitcoin that they owned. But of course, Bitcoin went way up and the stock really tracked with that a lot. And the owners and the shareholders did pretty well. But I'm sure there's also a lot of bad comparisons out there. Can you think of some ones that are not so favorable we should be thinking about when we evaluate Allbirds?
Well, I wasn't around during the dot-com bubble. You definitely hear the stories with various slap.com at the end of the name, and then it's a new company. Clearly they're going to harness the internet as well as any other company. They're going to make lots of money. But for me, more my generation, I saw similar phenomena during the Bitcoin boom, where the two most famous examples I can think of was Long Island Iced Tea Company. They rebranded to Long Blockchain, and that shot their company up 300 to 500%, which was very interesting to see. The other one that a lot of people might have heard of is Kodak, which I believe was the camera company. They changed their name to Kodak Coin and pivoting to crypto. Of course, neither of those companies, I believe, had great success. There's a hype cycle and people buy into it. And then, do they actually execute on the pivot, or is it just, bandwagoning? And most of it from what I was seeing was a bandwagon, and, the pop eventually sells back to the same level it was before or lower, if there's less trust in the company or they're wasting resources on a frivolous activity.
I had forgotten about Kodak. I feel like the story about Kodak.coin really is an example of P.T. Barnum, I think it was, the circus magnate's maxim that there's another fool born every minute or something like that. There's a hype cycle, and it's natural. People fall into that, especially when it's a brand that they love. People loved Kodak film and Happy Memories. It was all so tightly intertwined. It was one of America's most beloved companies. at the height of Kodak's power, Rochester, New York, where they're from, was one of the wealthiest cities in America. But those things change. And similarly, Allbirds is a company that I love. I own 4 pairs. I love that their shoes are completely biodegradable. I think some of them now have a tiny bit of like recycled polyester in the shoelaces or something like that. But when I heard that they were being bought out, I went and bought a bunch more shoes because I'm afraid that the new owners will change the formulations and things. So I'm sad, but it's just the way of business that companies have to evolve, or eventually they get beaten down.
Yeah, they would have gone bankrupt in their current trajectory. They were losing money. So it's perhaps better that at least the brand name and how the shoes are made, at least somewhat, will continue under the new ownership of American Exchange Group. But yeah, Allbirds, the company, basically the management, I suppose, now pivoting to, I think it's New Bird AI is their new name. And one thing to note is this is a real pivot. They have essentially raised money. They have sold their old company. Now it's essentially a shell company with a new name and a new mission. And the market is betting that they might be successful and that this has better prospects than the old company that was losing money. So it could work. We don't want to. This is definitely not a recommendation of buying or selling the stock, but it's like an actual business move where will actually be buying, assuming they follow through on their announcement and their word and their filings to the SEC, they will be buying GPUs. There is definitely demand for it. And if you're able to, Gordon, you had mentioned these are beloved brands, Kodak and Allbirds. You're essentially using that social capital, that brand capital, to say, look, like we may not have necessarily a thriving company in terms of Kodak or Allbirds, but we at least can build a brand, or we have some credibility on the street. So why don't you take a risk on us? So I kind of see it as almost like venture capital, where you are seeding a brand new company from scratch, and you're believing in the owners and the executive team that will be able to execute on it. And it's just, what the strange part about it is it's a public company and they're not delisting, at least not right now. Mm-hmm. It'll be interesting to see what they can make of it.
It occurs to me to wonder, their competitors in this space are doing a lot of different things in the technology AI industry, but this is kind of a pure play, as they say. And sometimes a pure play can really give you very high margins while the industry is evolving and before competition ratchets down the profit margins on a particular product. And so if they're just doing this and really sticking to, GPUs as a service, I can kind of see the potential there. But like you said, we're not making any recommendation here, but it's an interesting phenomenon.
The pure play comparison is a great one. So just in general in investing, I'm a big fan of pure plays. Like if you go beyond just, a specific segment of a, company, but going beyond of like, all right, let's not have a mutual fund or an exchange traded fund that has lots of things going on. Let's buy the best of breed. So I could see that totally relate to business where, all they're doing is they're going to buy GPUs and they're going to rent out the compute power. However, I am not that bullish in terms of who are they competing against. They're competing against Amazon. They're competing against NVIDIA. All right, those are two names you don't want to compete against. They're AWS from Amazon, and NVIDIA is just whole thing. They're probably the most competitive company in the world. They're the most valuable company, and they're happy to sell them GPUs, but they're also happy to eat up their market if they're successful. So I don't envy the position they're in, and I don't plan on investing myself, but it will be interesting to see if this is more so than just a canary in the coal mine. Is this AI, stuff a bubble, or is it, there's actual business to be made here and could be a long-term success play. In 2 years, 3 years, we look back on Allbirds AI and see if they're still listed on the exchange. And if they are flat or up, I think that says there's some staying power to AI. If they, disappear or, have some other problem that they go bankrupt very quickly after this, it could say, maybe there's a more systemic problem of AI investment across the board, even in these larger companies.
I'd wonder if they are successful, maybe it would be indicated by them getting bought out by one of the giants.
Yeah, they're willing to sell their only asset before, which was their shoe brand name, which I'm sure was beloved to the founders more so than anyone. So I'm sure they would be willing to take the money and run if a large competitor was like, "Wow, you at least succeeded somewhat. Do you want a large check to get out of this?" That would be a great way to get out of jail free card.
Well, we'll be watching.
All right. Well, come back hopefully next week with whatever headlines is hitting our inboxes and worthy of our reactions. See you next week.
See you next time.